Hi, Josh.
Morning, y'all.
Good morning.
Morning.
I don't know that I'm going to do much today because Trump's not doing his thing till 3 o'clock.
I thought it was 4 o'clock, but whatever. Yeah,
Well, after market close, wherever you are.
right. Oh, right. Different time zone. I keep forgetting.
And all the time premium will be gone by that point. It's pretty much just intrinsic value.
Yeah. Unless we can do that late afternoon to the next day, but I think that's a Thursday to Friday thing, isn't it?
Well, we got NFP Friday morning, so it's like we might as
That's
well look
true.
at the trade Friday
Yeah, good point
and take
there.
what intrinsic value there is.
Actually looked yet. Hang on.
Good morning.
Good morning.
Good morning.
How are you guys?
Doing good. And you?
I'm good.
Good.
How was your travels?
It was good. I got home yesterday and just all the stuff that you have to do when you get home. So, but good. No complaints.
Thinkorswim has to
So,
update.
let me see where we are.
I was just debating trading until after NFP on Friday because Trump doesn't do his tariff stuff until
Until
market
this afternoon. Yep.
and there's no time tomorrow, time value left. So I was like,
Well, the other trade would be if we want to do it, would be to go out to next week and look for 50 cents. But I'm still a little concerned about that as well.
have you gotten in this week?
I have not. Have not at all. Okay. Da-da-da-da-da-da. Mhm. Trying to move around to different monitors. Gonna open down a full dollar. I am not sharing, but I guess I can. Let's go see what we got. I just see the risk is way too high. So,
Volume did
what are
come
you
back
guys
in,
thinking? Pardon
but
me?
volume did come back, but the risk, yeah, is she should react to NFP. Nobody knows what it's going to do to tariff. Safest trade is no trade.
Okay. Let's see. We could get it 32.5 for next week at 50 cents. That would be one trade, but do you guys see my chart? So
Yes.
Yes.
let me walk you through gamma exposure
Okay.
and tell you why as TNA approaches. So there are always two sides to a trade, and we don't know exactly how many of these were individuals and how many of them were institutional or market maker trades. we do know that the vast majority of option trades are institutional and market maker. So as TNA approaches, so if we sell this, that means somebody bought it. Most people don't sell premium, but if the market maker is the opposite side, the market maker then has to hedge his position. With a delta of 40, that would mean he needs to, if he short these in order to hedge it to be delta neutral, he would need to buy 40% as many shares as he has contracts. So if he's got one contract, he'd need to buy, that's 100 shares of TNA. If he is short that, he would need to buy 40 shares. As it comes up and approaches the money, you can see that his delta gets higher and he needs to buy more shares, which is why things peg at certain levels. Okay, same thing is true on the put side. If he is long a put, he can put it to you, but he has to hedge against the short put, our position. So as it goes down and approaches that, the delta is going to go up. So he needs to do the opposite trade. He needs to stay delta neutral. You guys have heard about delta neutral trading. That's what they're doing. Okay, so delta neutral is the trade that comes from gamma exposure. Okay, so when I look at this at 30, and that's the only place that there is a reasonable spread, but the spreads are still very, very high, which says to us, and the market maker has two choices. He can take a trade or he can refuse a trade. So when you guys have seen, gosh, it's sitting there, it's sitting there, it's sitting there, it should be out and it's not. That's simply the market maker refusing that trade until he has an advantage on it, okay? Or at least he's neutral on it. So he doesn't have to give you that penny, even when it's sitting there. He can increase the spread to the point that the penny doesn't work. So right now, the quarter for today is out at 32, maybe 32 and a half. Okay. The peg point is at 33, either 32 or 33. So depending, and this is pre-market with the market $1 lower, so that 32 and a half is not going to be the peg point. But you can see that on Friday, we're likely to be able to get a quarter someplace closer to where we are with not as much risk. So if we trade, I'm most likely not going to trade today. I don't see an advantage to trading today. However, let's say we got our quarter today at 32 and it started to approach that. It needs to get to 32 and stay there before we do anything. So picking up 33 cents at 32, if that came up, or picking up a quarter at 32 and a half, we're 3 days away. Depending on Trump's tariffs, what do you guys think? Well, what are the tariffs likely to do? Drive stock prices up or drive stock prices down?
At this point, who knows? Because they've been going down.
Right.
So will it rebound if they aren't as bad as people expect? Or will it continue down if it's as bad as they expect?
Correct. So right now,
And also, quick question, what is a peg point? That I got stuck on that word.
say it again.
Peg point.
Peg. You know what it means to peg something at a certain level? Identify that that's the level that you want to. Rex pegs his ownership at various levels.
Okay, got it.
Okay. So
that's
yeah,
level
just
that the
pin it,
market
peg
maker
it, identify it as that level. But
Okay.
I'm putting together a presentation for you guys on the market maker and the market maker's role in all of trading, and why you see the way that people started studying. And I've been reading all the academic papers so that I can explain it to you. I know how I use it, but I need to be able to explain it to you so you guys can use it. But when you remember, we've had in the last 15 years several flash crashes. The market
Yes.
went straight down and then straight back up.
Right.
It's this phenomena that creates that. As the market moves towards a level, the market maker has to have the opposite side of the level. So if he is net short, he needs to buy to hedge. You've seen Sean hedge trades. Okay, this is the same thing. This is hedging his position. So you can see where he's got positions, and you can see that there's a gap there. So as it approaches 29 on expiration, he is going to have to 29, 29 and a half. He's got a whole lot of exposure at that level. Okay, so he's going to have to, if he's net short, if his gamma is net short, then, and you can tell that by, let's go over here. See the minus number there and the plus number there, he's net short. Okay, so I don't want to get really into the weeds with it right now because I want to make certain you guys understand it. But as it approaches these levels will tend to act as a magnet. Okay, you see the three of them? That's 3 times this level and 4 times to 5 times that level. So he's got a significant exposure at this level. Okay, so we want to be outside that level where there's not a magnet to the point of where we are. Okay, so the 33 and a half, there is not a magnet, not as strong a magnet. There's a very strong magnet at 32. So if we could get our quarter at 32 and a half, it's likely, excuse me, to float up to the 32 level if it floats. That being said, from 28, we're well outside 28. We need $2.80, which from current level at 28 would put us at 30.50. If we're at 31.50, we are outside that range. So if you want to trade, remember that if it starts approaching this level, we can take our profit, we can roll up for the same week, we're midweek now, or we can, if we're interested in having the shares taken away from us, if we've got the shares, we are already hedged. When we sell calls, it is a hedged position. We own underlying, which is a bullish, and we sell the call, which is a bearish. So in essence, we are hedging our position every time we write a covered call.
Right.
Okay, does that make sense?
Yeah.
Okay, so in that sense, the retail trader, the market maker's job is to provide liquidity in the market. Okay, that's why he has to take trades. But as you can see, he can make the trade very painful, and he lives in this middle area. He lives between the bid and the ask. Okay, this is where the market maker lives. Okay, and he is constantly trying to make certain that he is delta neutral. Okay, if he isn't delta neutral, if he finds himself way upside down, he needs to do the opposite. If he is buying, obviously drives up. If he is selling to achieve neutrality, it obviously drives the market down. And our 100 shares makes no difference in the grander scheme of things. When you do this at 1 million calls, It's 100 million shares, which is more. So you take the number of calls, you add 2 zeros. That's the position that he has to trade around. Okay, so he can be the entire open interest of the underlying, which is why we're looking for things that have significant open interest. We are constantly looking there, because if we don't have open interest, we have no liquidity. So that's why some of the stocks, for example, that Sean wants to trade, we will not be trading options on, because there's simply no liquidity. Okay, and when there's no liquidity, he drives, the market maker drives that. Now, how did market makers come into being? Market makers came into being because institutions, there are now so many people offering financial, there's all the brokerages, there are all the banks, all of these people have to have somebody who can manage it, and the market maker is that manager. So institutions offload to market makers their risk. Market makers in turn offload their risk by being delta neutral. Okay, for the vast majority of the trading we do, all we really need to know is these two numbers. We need to know the open interest to make certain we're not the market, and we need to know delta, which is the probability that we will expire worthless. Okay,
Now,
so
on
if you're
that side,
wanting,
that would
Pardon?
be, it would be like the inverse of that number. Like that's 11, it would be 89%.
89% that will expire worthless.
Okay. So
Okay,
11,
89% that
get hit.
right, the 89% that the person who buys will not make his, okay, the person who
Right.
buys this one has to make at least 26 cents. So it needs to go down enough. So, and it, as it goes down $1, it's going to move someplace between 7 cents and 11 cents per move.
Okay.
Okay, so when people are looking for delta neutrality, they're looking, and flip points, they're looking where this goes between that. Puts will always have a negative gamma and a negative delta. Okay, calls will always have a positive gamma and a positive delta, just by the nature of the instrument itself. So
Right.
when we're looking, and this is nothing different than I've been teaching you, this is the underpinning of what I've been teaching you. So
Yeah.
we're looking, when we sell, we're looking to be down here. By the way, Vicky, did you get your leap?
No, I haven't checked yet this morning, but yesterday it wasn't quite low. It was going up for a while, and then when it started to drop, it was later in the afternoon. So,
All right. So the same thing on the call side. When we're looking for our quarter, we're looking for something in the 11 to 15 range, but clearly under 0.2. 0.2 says 80% of the time that will expire worthless. Delta of 17.
10:15 to 11:40 is the spread on the 25.
Right.
So I figure after today, I should probably get that,
Yeah.
but I'm not putting it in as a pending just in case we do get one of those flash crashes.
Right. Okay, and it's the flash crash actually that we're looking for entering positions. It's a flash crash where you look to enter your position.
Right, that's the 25.
Yeah, that's the 25. Now, the other thing that when I'm looking at a single expiration date, it's the front month that runs the front expiration that makes him move, because the rest of it has time. But his position is net. So let's say at 25, he has 33 on that one. 25, he's got 16 there. So his positioning at any of these levels is the accumulation of all of his open positions. Okay, not just the front expiration, but all of his. So you think of it as if Sean were entering a position that he intended to hold for 2 minutes, meaning he wants to get in and out, versus hold for a day, meaning he wants to have 25 pips, versus holding for a week, he wants to have 125 pips, versus holding for a month. Okay, when Rex looks at a position, he's looking at a longer term hold, whether he gets in and out quicker or not. He is looking for a certain movement in the stock. The market makers' exposure is the accumulation of every open position at every strike on the board.
Okay, so there's a lot of
That's-
people at 40.
Pardon me?
There's a lot of people at 40 there.
Correct. Okay, so the bet for the people at 40, okay, is, and I need to have it trade. I'll let you do it, Vicky. What's the bet at 40?
At 40, that
If you buy 40,
let's see, you're on 41 now, but 40
Yeah.
is 555.
yeah,
So it would have to be 40 minus 555, so that would be 34.
nope,
60
nope, nope.
No, or plus 35.55 then, or 45.
I know. 45 is break even.
Okay, got it. Because on the call side, it's opposite,
Right.
right?
So in order for you to make a penny
Right,
in
because I'm
January
paying
of 27,
555
it
for
has to
40,
trade
so
at 45 or
50.
higher.
45.55.
Right.
Or-
If you want to make 100% on your trade, it's got to trade at 55.
And actually, to be technically correct, when you're buying, you get the ask price, which is 620, so it would have to be 46.20,
Right. Okay.
unless you
So,
have, right?
right. Now, what's our delta?
Is that 50? Yep.
Says for every dollar movement in the underlying, you should get
50 cents.
50 cents. Okay. So this is what he's looking at, and he can hedge in a number of ways. But the reason the market moves on Friday, and we'll do that this Friday at the close so you guys can see it. But the reason that the market moves on Friday, either up or down, is we need to see how much risk he still has on the table at the end of the day. He has to be delta neutral. All of these will be triggered in some way. He will have to deliver shares if he is
Yes.
long.
The week, because it's a weekly, so that's why it happens Friday.
Right. And if we were to be looking at SPY, which is a daily, we'll see the same thing. And this is how the market makers hedge large portfolios. Do I not have SPY up? Okay. When we look at this afternoon, okay, and this is the reason the late afternoon on the SPY works for, I don't see Nick, so for any of you, look at where his positioning is on SPY. Okay, so he has to clear these out in some way. Okay, and do you see the gap there?
Yep.
It's double. Okay, and those are billions. That's an E7. Okay,
Okay.
so these are
That's what,
big.
oh, so that's 7 digits past the decimal there.
7 digits past the decimal.
Okay.
Okay, so these are big numbers on SPY. This is the reason that most people, if you start reading up on gamma exposure or delta neutral trading, Josh, you heard Sean talk about delta neutral trading in larger portfolios. This is the reason that the market will tend to move, is the market maker has a significant risk associated with this position. On the other side, look at this one. See, this is a 9, a 1, a 5. Okay, so he has to hedge this risk. Look at that number. Somebody, we don't know who, but somebody has a pretty significant risk. If they are short that put, what do they have to do? If I'm short a put and it expires at my level, what do I have to do? Buy the stock.
Right.
Okay, so he has to deliver that many shares at 2 zeros. He
Yeah.
has to deliver. Now, the volume, okay, on something like SPY is sufficient for him to do that. The volume, when you get down to something smaller.
Yeah.
Daily float. That's what creates flash crashes.
Okay.
Okay, and these are dynamic. You can see when we're
So
watching.
actually, when buying a leap, you've got a lot of time on there. So if you want your price at 10, I should probably put a pending one on there, assuming that it probably would flash crash. And then it will go right past my price and then right back up again.
Okay, the issue with, you mean the pending to buy?
Yeah.
Yes, that's the reason I leave my pendings at the level that I'm willing to trade them at.
Okay.
Okay, so I leave mine sitting.
So I'm going to put a 25, purchase a 25 leap.
At
Or-
10.
Yeah. Yeah. Once we see what happens this morning. Yeah.
Okay.
Let's
I don't
see.
answer unknown callers, so we're down 121 and you might get it. Remember, he's now looking to hedge everything he's got. Let's go down to
10 to 11:45.
and the entire market's down, the Dow's down, the NASDAQ's down, the S&P is down. Okay, so when you're looking at what he's doing, he is now heavily, let's go back to the S&P. He is heavily trying to figure out what his position has to be by the end of the day. We'll see if we can figure out where he needs to be. The gamma exposure takes a long time to calculate, because remember, it's going out and it's accumulating all of the positions at a strike for all of the expirations. This looks like there's a gap. Come on, give us that one.
Did I just get that? I just put one on and I didn't expect to get it. Let's see. Did I got it. Look at that. 25 call for $10.
Okay,
And it was asking like 11:45.
right. And that's the reason
then
we
I-
leave them sitting.
I dropped it down to 10. Okay, well, let me go put another one onto the small account since he's being agreeable today.
Okay.
Oh. Single.
Oh, came down, Vicky picked you. That's a SPY. Let me go back to TNA. Came down, Vicky picked you up. You
Mhm.
probably will not get it at 10.
All right, let's see. Hang on. That's the smaller account. That was my IRA, so I figured I had some leeway in that one, but we'll see. Oh yeah, it's just bounced up again.
Doesn't mean it's gonna stay there.
Nope,
But
that's
we
true.
are looking yesterday, Josh said it floated between 28 and 30, most likely to do that. Let's go see where our trades might be. Look at these spreads.
Yep, they're big.
That is a 33 for a quarter. I gotta see what account I'm in. Just for grins, I'm gonna put it on and see what his reaction is.
33 has been the level this week, pretty
Yep.
much.
So that's a 14-cent trade. I'm gonna go out to next week.
See if you can get 50 cents there.
Yeah, we'll see. Okay, so those would be the two trades, but let's go back to the chart, and this is why we wait.
Yep, look at that.
Okay, now why, can anybody explain to me why this happened?
And people had pending buys sitting there waiting for the open, or stops
They
got.
have pending sells,
Oh, got it.
and
Okay.
as they got filled, what did the market maker have to do? There
They
were
had to
people
buy.
panicking.
Okay.
So to hedge, if he had a whole lot of sells on, what does he have to do?
He has to buy.
He has to buy to be delta neutral.
Which is probably why the AI that's doing the trading said, "Oh, we've got a buyer there."
Right, now,
It was out. They gave it to me quick.
on your chart, and I'm trying to find, there is on the volume, and I can share it with you. I thought I had put it on this chart, but I apparently didn't. And I will share it with you. There is an advanced volume bar that shows the number of buyers and the number of sellers. Let me see if I
Oh.
actually still have it on my deal. Studies, edit studies. Advanced volume bars, add selected, apply. Okay, let me get to a bigger chart so I can see it. Vicky, I was looking for one, but do you see down here?
Oh, yeah. You get the green part is the buying volume and the red part is the selling volume. Is that it?
Correct. So, again, and maybe I'm teaching you guys too slowly, but we had to learn volume before we can start looking at this. Let me take my volume bars off, which means I need to be here. And I need to go apparent, no, general. I do this all the time. I need to be in equities and take off my volume bars, apply, okay. Okay, so let me take off my MACD cross so we can look at that as well. Okay. You see that? And you see the relationship? This candle goes with this one, heavily red.
Right.
Okay, these candles, heavily green. Okay, so I will share this advanced volume bar with you. I was looking, Vicky, to see if I could make it come up on the right-hand side, and so far I haven't figured. I've been looking at the script, just the script on the volume bars that you use.
Yeah.
But if we could get that, but let's look at this. We're gonna move to even. Okay, so Vicky, this is the reason. Now, Josh, you wanted to identify that for us? What is this pattern?
That's a triple bottom
Okay,
on the hour.
yep,
And if it gets rejected here, it's going to go straight to 30.
okay, which is why I should probably take my trades off.
At least it's supposed to. That doesn't mean it will.
Only 9:38. It did some of this yesterday too. Some up, down, up, down, up, down.
Okay, so, but this is why we leave our penny pending orders on it.
Yeah,
Okay.
30 was the
There
high.
are no, right now, there are no sellers.
Yep.
Okay, now, what happens to buyers? Ultimately, we run out of them. Right?
Right.
Same thing that happens. Ultimately, we run out of the sellers. Okay, and then the buyers. So you hear Sean talk about, these are the things that Sean talks about all of the time, but he doesn't go into why it happens that way. Okay, but he talks about the buyers and the sellers and the tug of war.
Right.
This is the buyers and the sellers and the tug of war.
I remember he had one of the very old summits, I think it was from 2012. He had a lecture where he explained that very well.
But do you see the power?
Yes.
So if you want, I'll share the advanced volume bars with you. I have not found a way. Vicky, you might want to put yours on the bottom when, in addition to having yours on the side, so
Right.
you can see how they move.
Right.
Okay. But when you look at it, what we're looking at is right now, there is an absence of sellers. So when there are no sellers, who has to be the other side of your trade? If you want to accumulate stock, who has to be the other side of the trade?
Broker,
Market maker.
market maker, right?
He has to be the other side of the trade. Now, he can make it painful for you.
And that's what he does with the spread, right?
And that's what he does with the spread. Okay, so there were a lot of people overnight who said, okay, I might be in trouble. Now, these are not huge volumes yet. Okay. Let's go out on an hour chart and see how much, what our volume. See, this is not a huge volume on an hour chart yet.
Right.
Well,
Okay.
this is literally what Buffett is talking about when he says this is a game where the patient take from the impatient.
Right.
They just did it.
They just did it.
Mhm.
Okay. And when you look at and I want you to line these up, okay? Very few buyers, a lot of sellers, and that was the candle that you got. Okay. So when you look at this, I want you to start looking at, okay, where are people? What are they doing? How are they doing it? And what do I need to do to trade? Okay, so as we go forward, and for right now, until you guys, I can really explain gamma exposure to you, you can see gamma is the rate of change of delta compounded by time and volatility, theta and vana.
I
Okay,
don't want to see that calculation.
right. I mean, this is a crazy calculation.
Yeah.
Okay, but you have
But
your
it shows you what
here.
they're actually doing. So,
Right. Okay, you have your volume. You have your delta. This is open interest. These guys are trading today. These are all current exposures. Okay, this is his exposure at 32. And at 32 right now, we could get our quarter. Okay, I might be tempted to put in a good till cancel at 33 for my quarter and see if we get any reaction. What happens if we don't? Okay, we've all said that we are going to not trade this week. Is there an alternative, Josh? I'm going to do 3. Is there an alternative, Josh, to not trading this week? I'll
Well,
give you the obvious, trading. Now I'm
trading, yeah, you
asking
can
you
trade or not
for-
trade.
I'm asking you for a trade.
Well, like you talked about earlier, we could trade into next week, getting this week's goal and next week's goal.
Okay, Vicky, is there another one?
there's trading in a safe zone, which
So,
we don't know what that is at this point because
Well,
it's
but-
dropping 10%. So
Okay.
say 20%. Can we get anything 20% out? I think that sounds pretty
No,
safe.
but what we can do is we can go and we can say, okay, I'm willing to sell, but I'm only willing to sell at 25 cents. Now, how is it going to get to 25 cents?
Price is going to go up.
Okay.
Yeah.
Now, do I think 33 is safe? You see, I just became the ask. Okay.
Okay. Got it.
Okay, but I can put it there, and if it goes up and gives it to me, that means I've had this amount of movement in my underlying. Okay, if he gives it to me, great. You still see he's protecting himself, but here's his number. See this number?
Right.
See the open interest? Okay, now for right now, you normally look at 2 to 3 to 4 strikes for the number there. So the number in the 5 strike range is at 30. Okay, there's his open interest. There's his delta.
Okay,
Okay,
so you want to be within 5 strikes of that. So that would be let's see. 30,
down
50,
here.
31. Going
Down
by
to
50
31.
cents. All right.
Right. Okay, now if you wanted to be safe,
Actually, that's just 2 strikes, isn't it? 5 would be 32.50. Is that correct?
no, they're all in that. So if I want to be safe, would anybody take this trade at 50 cents, 31 and a half?
Check the chart. 31 and a half. Yeah,
Okay. I just became
32 is better, but 31 and a half is
okay. So when you look at it, why did I go to the 31 and a half?
because it's above that big jump.
There's your big jump.
All right. So the
Your gamma
magnets,
exposure is
the
double.
magnets at 31. So you at 31 and a half should be pretty safe
Right.
because the magnet stops at 31.
And can I get my quarter here? But look, there's a
Oh,
second
there's a magnet there. Right.
Correct. Okay, so I put my quarter down here. Okay, so I'm trying to stay away from. Now, you'll also notice that most people trade dollar increments.
Yep.
So we have some advantage when we trade the half increments.
Right.
Okay. So delta, open interest, volume, okay. So when we're looking at this is
I'm
just
still a little fuzzy on the difference between volume and open interest.
volume is all everybody who's bought or sold for the entire time that this strike has been available. That's everybody who's in the market. The volume is today.
Oh, all right.
Okay.
Okay. So people are interested at this level, but there's only 63 or however many, 12
Right.
at that level right now.
Right.
Okay.
Okay. So there's nobody right now trading the 29.5 today. There are a lot of people who traded the 29 today.
Okay.
So let's talk about the 29 trade. If I sold it, I get $1.25. I'm going to round. I get $1.25, which makes me safe to what level? 29 less $1.25, 27.75.
Okay.
Okay. So when I sell, I want it to end where? Beneath wherever I sold. Okay.
Mhm.
So gamma exposure deals in double negatives. If my exposure is long here, I have to sell to be delta neutral. By definition, calls are positive, puts are negative in
Okay.
gamma.
So he has to buy on that side.
Right.
Okay.
Okay. And it's what he's got to do. So
And
if you
actually,
sell
it
a
goes
put,
along with that old, you call people up on the phone and then you put the phone down.
right.
So the puts are down and the calls are up.
Yeah.
And so it's actually not a double negative. It's actually kind
Well,
of, we
but-
were used to thinking in double negatives because we're selling them.
Well, but if I sell a put, I've sold a negative, I'm positive.
But if, right.
Okay, so selling a put, even though puts by definition are gamma exposure negative, I sell it. I've sold a negative, so I have a double negative. I am bullish. That makes me long gamma.
Right.
Okay. If I sell a call by definition is long gamma. If I buy it, I'm long. If I sell it, I'm short. So
Right.
you have to multiply the operations. Okay.
Right.
And you have to remember that the market maker owns all four sides of a trade. He owns the long put, the short put, the long call, and the short call.
Okay.
And he controls them with
With
the
the spread.
spread. Okay, so I put in a couple of trades. And so I got to Vicky. Norma, do you have a third for us?
No, I can't see the numbers at all. They're too little.
Okay, let me tell you the trade that we see Norma take a lot. Norma will go out a week, get high premiums, and take her profit off the middle. Okay, she did that this week. She was out 2 weeks and she took her profit. Okay, so another trade would be to go to the 11th and see how far out we can get our 50 cents. Okay, we're still looking for all the same parameters. Out next week, his spreads are a little better, but we can get to 33 maybe. Okay. Our magnet for next week is 30, 32, and 34. So we would want to see, can we get out to 34.5, someplace in this range for next week? So we're fixing to go positive, guys. There you go. Make sense? So now, Josh, I'm going to let you interpret that chart. What are we looking for?
Quick question, is Rex traveling now? Because I just realized I don't see anybody recording this, and this is a good session.
It's
Oh,
recorded. Top right.
Oh, it is recording?
yeah, it popped up when I came in.
Okay.
We'll just
No, the
ask
only
to
thing-
post it.
Oh, okay.
So Josh, what are you looking for?
I'm looking for a break above 32. Well, wait a minute. What is that? 30.50? A 30.50 would be a confirmation that we're going to the top side.
Right there.
Yeah. It's basically in Rex as a little box trade that he doesn't touch until it breaks out one side or the other.
Right. Okay. There are numbers. So since we opened, let's go back to a smaller time frame. So we have been devoid. We see Sean's tug of war.
Yep.
Okay. So actually learning to trade options should help you in your Forex trading, because this you can really see because you can chart it differently. There's your tug of war, and you see it. Okay. You see how small that candle is? So we see it roll over. Then we see seller, seller, seller. Oops, the buyers say, okay, I've got my friends, I'm coming back in. Now we see some sellers, but do you see the seller bars? How small they are compared to the buyer bars. So we need to, here's our tug of war. In Sean's term, this candle should be our telltale candle. It's going to tell us whether our buyers or our sellers win. But we're still in very light trading historically. There's a 30-minute. Okay, this is our 30-minute bar. Okay, but now you can see, and as you watch a bar develop, let me get down to 5 minutes so we can watch a bar develop. Okay, as we watch this bar develop, this one, this volume bar, as we watch it develop, we get lots of information of how the market is actually trading. Okay, this gives us information. Our candle gives us information, but it doesn't tell us whether it's a lot of buyers or a lot of sellers or little buyers or little sellers. This candle gives it to us. And right now we need to be, let me broaden this out a little bit. Okay. Here is our average volume. The yellow line is average volume. Okay, so we need to be over here someplace for average volume up in this range. Okay, so as we watch our candles develop, then we see how the buyers and sellers are coming in and trading. But we're still very light volume. We've had our big volume push for the day, so now we're looking for drift. And right now we're in a tug of war. We need a break above 29.50 give or take, someplace up in this range. Okay. To confirm. Does that make sense, guys? Danny, do you have a fourth trade?
Not, I don't. I've got everything covered, so I'm just gonna wait for them to expire Friday and start over next week.
And what levels are you at? Where you're
Um,
covered?
I got 36 calls. Uh, for
And what are they worth right now?
uh not much, but my penny good to close never did fill.
So it's still on there.
Yeah, it's still on there. I didn't know whether just to cancel it and
Well, if you
Sit
want,
with-
if you think you're gonna want to take another trade this week, we need to get out with whatever we get, whether it's 2 pennies or so. I'm gonna stop sharing. Put yours up and let's walk through that.
okay.
You guys want the advanced volume bar?
I was gonna look
Yeah.
at the studies and see if I could find it. Because I haven't been looking at the
It's
study.
not in there. This is a study
Okay.
from the ThinkScript group.
Okay.
Right. Uh, bu- bu-
Here's my calls and this is my good to close up here.
Will you click on that for me and do the change on your good to close? Let me see what it's actually change and cancel and replace. No, one down. Yep. And what, I can't see the bottom of yours. So what's the mid? What's this range down here?
Crap out of the way.
What's,
No, oh, there it is.
yeah, no,
Mid
go the
range
other
is
way.
okay. 3
So he's still wanting 3 cents.
cents.
Okay. Go up and see why I think he still wants 3 cents. And you're at 36.
Yes.
He really doesn't have a lot of risk there. I mean, he's got, there is a big gap between 35.5 and 36, but the chance of him having to do something out there aren't that good. So he's probably going to sit. So if you wanted to trade again, he's got a 400% spread. His spread is between a penny and a nickel. And nobody's trading that today. And let's see if Vicky was the market for her leap. $25 volume. Takes it a while when I've got the gamma exposure on. I apologize. So the trade that we see Danny do a lot is go out in time. So the fourth trade would be to go way out in time and get a lot of premium at a very good strike. Still trying to populate.
Do you want me to stop sharing?
Nope, nope. So
okay.
let's go to
Okay.
your trade screen. And let's go out 3 weeks. Let's go to the 17th. Okay, and let's scroll down and see, we can go to the 25th. Let's scroll down and see where we get $1. Now look at these spreads, guys. You see his spreads? Look at the
Yeah.
spreads. Okay, so our dollar, which is what we would need, is still at the 32.5, but look at the spread. That's more than 100% spread. Okay, which says to us, he has no idea. Okay, and if I go out to the 25th,
Okay. I was muted, sorry.
the 32.5, he has very little exposure, very little open interest. The open interest on the 25th is at 31 still. Okay. So on days like today, this is why I don't trade on days like today. I may put in a good till cancel, which is what I did, but look at that spread. Okay. It's 100% spread. That's a 200% spread at the 30.5. Okay, that's how the market maker controls the market. If I want to buy there, let's say I want to buy at that 30 level and I buy at 226, I have to have 35 by the 2nd of May to make my number. I have to have 32.5 by the 2nd of May to break even. Now, on the chart, completely possible, okay? If you'll stop sharing, let's go back to our chart. We are turning positive. You guys see it?
Yep.
Yep.
So this is why we wait till the market's open. Josh, there was news this morning. Do you know what happened?
It didn't do much. It was that ADP, NFP, market didn't care. It was better, 155,000 jobs versus the 118 they were expecting. But the market didn't care.
Okay, there's the euro. Let's see what else we got to look at. There's our TNA. Here's SPY. Okay, let's go just for discussion of GEX. Let me bring this down to something that's not going to take forever to populate. See it? Right at the money. There's what he's going to have to deal with this afternoon. And as it continues to climb towards that, how is he delta neutral? It goes higher. He has to buy into it to be delta neutral. He has to, if he sold those calls, which he is the other side of, he has to buy into it so he can deliver at that level. And how much does he have to buy?
Okay.
47% of what his outstanding is. That's where the magnet comes in. Okay, he has to be buying as it approaches and stays at this level. Okay, based on, and he sees these things, okay? He's got something called an order limit book. Okay, he knows where all the limit orders are. Now, you've heard people say the market maker just comes down and gets my stop order?
They do that.
They absolutely do. They see the book. We don't see the book. It's gamma exposure that gives us a peek into an implied limit book. Because what they can't hide from you is the amount of open interest, and all options are an indication of interest. Okay, if I'm buying this call, what does that say?
I'm
I'm
interested.
interested in being long. Okay, so as you see things pile up, I'm interested in being long. What happens if I buy a put?
Interest in being short.
I'm interested in being short. Now, we can.
Maybe I gotta run. Thanks
Okay.
again.
You're
Thanks, sure,
welcome.
appreciate it.
All right, talk to you
You
later,
guys have a
Dan.
good day. Yep.
Okay.
Hi, Danny.
Later, Danny.
Have a good day.
You too.
So when we sell a put, we sell it in a safe zone. Okay, and we say, okay, I am willing to own at this level. So our safe zone play right now would be the level that Rex has been trying to accumulate. Okay, we can get all the way down to 20. Where can we get 26.5, 26 and get our quarter? Let's look at our chart. $26.
Debbie, I apologize. I'm gonna go watch Rex on the Wobble Crew.
Okay, nope.
I'll catch the rerun.
All right, we're close to being done unless guys have questions. But this is why I have a tendency to put in a working order. If it hits, it hits. If it doesn't, it doesn't. No harm, no foul. Talk to you later, Norma. So Vicky, would you give me a call?
Sure.
You have my phone number?
No.
All right,
Let me
it's
get a pen. Hang on. Actually, I could probably
You're
call.
recorded, remember,
I
Danny.
am recorded. Vicky,
Oh,
let me
yeah.
give you
You
an
know
email.
what?
I've got
Yeah,
you.
that works. You got my email. Oh,
Yeah, and the emails that I have sent you should have my phone number on the bottom of them.
oh, okay. I'll look you up.
Okay. So if you would give me a
I can
call,
see your email now too. Did you know that?
okay. So that's kind of where we are, guys. Again, I do have some pending, nowhere near the number of shares I've got, so I do need to put in some pendings if I'm gonna do them, but that's how I do them. If this gets hit at a quarter, I'm fine. 33, if that gets hit at 50 cents, I'm fine. Okay, so if they sit out there, they sit out there, no harm, no foul. So that would be a trade if you want to put them in.
Thanks, David.
All right, Josh, I'll talk to you later too.
Okay.
Actually,
All
wait,
right.
can you hear me? Hang on.
Uh-huh.
Yeah, I don't have your phone number on the bottom of that.
Oh.
For some strange reason.
Normally I say thanks and do my name.
Hang on, let me go back and check other emails. That was just a check-in. Let's see. Hurricane Helene update. Oh, there it is. Got it.
All right.
Okay.
All right. Sounds
Thanks.
good, guys.
Later.
5 minutes?
5 minutes would be great.
Okay. Bye.
Bye.